CBDC is a digital currency which is backed by central banks around the world.
They actually are governed and backed by monetary policy. They are generally offered by a regulator, so they back it, and they're quite liquid in nature and fairly stable, so they're not as volatile as a cryptocurrency.
Central bank digital currency is a digital version of traditional banknotes. So instead of issuing and printing traditional fiat money, the central bank issues a digital fiat currency.
A digital dollar, for example, has the same value as a paper dollar or a dollar in your bank account. So the idea of a central bank digital currency is that the unit of currency is interchangeable with other forms of the same currency. So today you might have a banknote that has a different form, of course, to the equivalent amount that you might have in your bank account, but they have the same economic meaning. And the central bank digital currency will be another form.
Many central banks have already started some work on their national digital currency. The latest survey of 66 major central banks by the Bank for International Settlements showed that 80% are involved in some sort of work on the CBDC. That's an increase of 10 percentage points from the previous survey. In mainland China, a pilot program in 4 cities, including Shenzhen and Chengdu, has to date drawn 4 million transactions worth $300 million. Sweden is exploring the idea of going completely cashless, with all transactions to be settled with an electronic equivalent of the krona, the e-krona. Other central bankers are more cautious. The chairs of the US Federal Reserve and the European Central Bank say more time is needed. But while different countries are at different stages of deployment, market observers say it's only a matter of time that each country will come up with its own sovereign digital currency. One concern is that people must feel secure in holding savings and investment in this digital form. According to experts, the CBDC is a safer and more stable store of value than Bitcoin. In fact, the CBDC is even safer than your deposits in the bank.
When you have money in an account at a bank, that's a liability of that commercial bank. Now, most deposits, of course, are guaranteed by deposit insurance and ultimately backed by governments, but not all of them. And so for some kinds of deposits, there is a small amount of credit risk, whereas cash is a direct liability of the central bank, not a commercial bank, and the central bank in principle can't default on its own liabilities. And a central bank digital currency is designed to have those same properties as cash.
There is one problem, though, that hackers could get into the system and the digital money gets lost or stolen.
If you are using the blockchain technologies where there are checks and balances, then it is the hacking will actually be reduced. If you look at the Bitcoin ecosystem, the Bitcoin itself hasn't been hacked, but the intermediaries using Bitcoin has been hacked. If the government plans to use an in-house technology that does not use a distributed ledger technology, yes, the chances of it being hacked is very high.
Secondly, the consumer experience must be absolutely seamless and convenient. The CBDC just becomes another way of paying for goods and services.
We do not want to have any condition attached to this kind of digital currency because it will lose that kind of fungibility. Let's say someone owes me $50. The person who paid me $50 will not be a $50 note. It can be $20, two $20, and one $10 because it's fungibility, you see. So for a digital currency, right, if I have certain conditions attached to it, so it only can be used for transaction A, it cannot be used for other transaction because it's already targeted for that transaction only. So that reduces the fungibility potentially of a digital currency.
To create reach and acceptance of this payment method, other countries can draw from China's experience with its pilot digital yuan project.
They have given out, through a lottery system, some of the central bank digital currency to people to test and try, to receive money into their payroll, to use it at a retail payment store. So that's amazing, right? So that's a good way to make it mainstream.
Privacy concerns could, however, hinder the widespread adoption of the CBDC. In the digital space, money moves around faster, making it tougher to trace suspicious transaction activities such as money laundering and terrorism financing. China has taken the approach of monitoring all transactions closely in real time.
Every time we make payment or receive payment from digital yuan, it will be recorded in real time in the ledger of PBOC, the China Central Bank. So advocates for it will say that, hey, it would be good to actually track potential money laundering. It can be used to track potential terrorism funding, okay, in a way. But on the other hand, it may allow the government to actually know individually their citizens, what are they doing.
On the other hand, the Swedish approach allows some degree of privacy.
That technology is used on blockchain, which is decentralized. That means being decentralized, the activities or the transaction that's being transacted, it cannot be easily tracked by the government in real time.
But that doesn't mean illicit activities can go on unnoticed. Ultimately, there is a digital trail for every single CBDC transaction.
At some point, there is a link to a real person or a real business. So I think it's very difficult to ensure true anonymity of a central bank digital currency. So it's really about how difficult do you make it for other people, be they other third parties, or be they the central bank, or be they governments, how difficult do you make it for them to access that data and to monitor flows of cash?
The challenge for each central bank to consider in designing their CBDC is therefore to achieve a fine balance between protecting consumer data privacy and weeding out illegal financial transactions.